morning, everybody. By now, I'm pretty sure we already covered the strategy in our masterclass. If you're watching this video, then you must have joined the Feel Good Masterclass. And by now, I'm pretty sure we have covered how the strategy works from beginning to the end. I'm just going to make a quick walkthrough right now where I'll just quickly run through the strategy with you, just as a recap before we jump into other topics, okay? So I've marked out all the footprints that have played out since beginning of June on GPJPY, and this footprint, just bring a slower right there, this footprint right here, okay, move it to there, this footprint here played out here on GPJPY. So as we see, this is our footprint line. It's in divergence. It's divergent. If we compare it to this right here. I'm not use that one. Let me use this one here. If we compare that to here, it's divergent. Okay. See that this is going down, that's going up. So that's divergent. And now, when do we want to enter this? Okay. Okay. Forgive me. I have taken something off here, which I believe should be on. Something's missing. This. Come on. Load. Okay, there it is. This is how I set up my charts. Okay, this line right there, I was missing the 10 SMA. So this played out this way. Over here we had right, played out this way where we had our entry right here on this candle. So many disturbances on this candle right here. Let me just zoom in a little bit. Okay, right there, like this. Jesus. Okay, this was going to be our entry on this particular. Do you see this first bar right here? That right there, corresponding with this here. This here was our entry candle. The moment this closed, right there, we entered. Right there. This was then our stop loss on this candle. Stop loss is at the very bottom of this one, as it corresponds right here with the CCI's first bar. I'm not going to go over the criteria because I'm pretty sure you have read the PDFs. I'm just walking through the whole, maybe just one trade, just to recap. Okay. So when this happened, we entered there. We put our stop loss here, and as the market continued moving in our direction, we saw this bar happening, and as it changed color and was longer than this one, right here, if one was leveraging, right here is where you would have entered your second position, and you'd have moved your stop loss from here to right there. Even if you're not leveraging, now you're just lessening your risk to this position right here. So your stop loss moves right there, meaning you're almost at a break even already, and you just let the trade run. This here is not, we don't do anything with this, because this bar is smaller than the previous one, and we're in a buy, so we don't pay attention to this one. However, we then do pay attention to this bar right here. Okay, this bar right here, because it's longer than the previous one and it changed color. So which means right here you would probably add another position if you were leveraging, and you'd move all stop losses to right there. Okay, that's if you're trading following the CCI. Okay, but what I do personally is I trade following the CCI and price action at the same time. So as I would have entered right there, price action CCI, my stop loss would have been here. Okay, and yes, it would have moved to there following the CCI, carried on. Now following price action, the moment, let me make this red, the moment this candle closed past here, the moment this candle closed past that level, past the open of this cell, in fact past the open of this cell right here, right there, I would have dragged my stop losses all the way down here. I'd have dragged all of them to right here. That's where I've moved my stop losses to. Why? Because this here, according to price action of trailing my stops, the market should not go below this candle. Okay, this candle right here, market should not go below this candle. Just to continue going up, and as you see, the market respected it. It did not go below this candle, so I'd have moved my stops, my 1, 2 to here, and I'd have waited. And then when this happened over here, I would have, if I was leveraging, I'd have entered another position and trailed all my stops from here to there. Okay, I would have trailed all my stops to right here. Then as the market kept on doing whatever it was doing, I would have waited. Then according to price action, right here, the market closed above this candle, closed above this sell candle, the open of this sell candle up there. So on this very same candle, it also lines up with the CCI when trailing stops. Okay, so my stop, which if I was following price action, my stop would be right there. But since this particular entry here lines up with a CCI, my stop would have moved to just below this very candle. Right there is where my stop would have been. Let me make the screen right here. That's where my stops would have moved to, following the CCI. I would have probably maybe entered a position there and moved my stops to here, meaning I've locked in profit from here, from here, and this here would probably, risking less. Somewhere here. Then as price kept on moving, I would have been watching. So now right here, the moment the market moved and closed past the open of this sell candle right there, okay, my stop would have moved to just here, okay, just there as a conservative stop loss. So I would have trailed all those stops, which are somewhere here now, to about here. And when the market finally broke my trading stop right there, I'd have come out of that whole position right there. But that's how I manage my trades aggressively. It's very important that you learn to manage your trades and risk less, because this market is about how well can you hold on to your money. You need to be able to make money and hold on to your money at the same time. So we need to be able to risk less and make more. So that's how I would have managed this trade. Now let me talk about a losing trade. On Friday, I didn't make any. Let me just move forward to Friday. Friday had a losing position right here, and I missed the buy position. This one here wasn't really a valid buy position. Let's not mind that one. So Friday here, I had a losing position. I'm going to show you how I manage a losing position. For example, Friday I had this entry here. There was a sell on right there on GJ. There was a sell. So the moment the market gave me this confirmation right here, okay, it closed below the CCI here, but it had not given me, closed below the 10 SMA here on this particular candle right here, but it had not given me confirmation on the CCI right here. So I did not bother with this trade. I waited. Next candle happened here. I waited until I got this right here. On this particular candle here, I took my sell, and it matched up here with the CCI. When I took my sell on this particular candle, I then put my stop right there, okay, at the top of this candle, because of this, okay, because of this right here. I was matching up my stop loss to the CCI, okay. As the CCI moved on further down and gave me a lower bar, that one right there, on this particular candle here. Okay, let me clear this up a little bit. It's a bit crowded now and not clear. Let me just get rid of this. Okay, behave there, get rid of this. Okay, what happened to my divergence? Hey, from there to here. So I entered here, okay, I entered here, my stop was here, as you see down here, and then on this particular bar, the next bar, which pushed lower than the previous one, over here, one would have entered another position here, but I was not leveraging. I just trailed my stops instead to here, okay. My original stop was there, but I trailed it to here following the CCI. Okay, meaning I'm risking less than my original risk. So when this happened, I risked less. So unfortunately, on that day, the market went against me, and this bar took me out. Okay, this bar right here took me out, but I lost less than my original risk. So that is how we keep our money in forex. You always want to lose less than your original risk, if possible, because sometimes, well, the market doesn't give you a chance to trail your stops. But wherever the market gives you a chance to trail your stops, please always trail your stops following the 4 ways that I've shown you how to trail stops in those PDFs. I showed you that you can trail stops. Just a quick recap: you can trail your stops using the stochastic. Yes, you can trail your stops using the footprint line. Okay, using footprint line. Those are the 2 simplest ways you can trail your stops. But then my 2 favorite ways are trailing stops using price action and the CCI. I mix those 2 when trading stops. I find that most effective. Okay, that was a quick recap on our trading strategy. Now, to get into the topic of today, which is psychology, we want to get into a deeper part of psychology. Okay, when it comes to trading, trading is really deep. It's really, really deep, and most people think of trading in a wrong, I won't say wrong, but in a bad light. They don't see the market the way it is. They see their own thing. What I mean is this: success in trading, it's like a quiet daily habit. It's those little things that you do on a daily basis that make you successful. Sticking to your rules, not over trading just 1 or 2%, at most 3% of your account. There are days when I can go crazy. Sometimes I won't lie to you. I sometimes go crazy and probably trade like 5-10% of my account, but that's because I'm advanced at this. There are certain things that I do that I can't really explain, because I can do them off intuition. There's sometimes you can just trade off your intuition because you have seen this thing happening over and over again. And even if I'm trading like maybe 10% of my account, you find like if that trade doesn't work out, I might probably lose 4% or just 3 or maybe even 2% of my account, depending on how aggressively I trail my stop losses. You know, so managing your trade is the very, very, very most important thing in, you know, executing trades. You need to be able to manage your trades. That's where your money lies. So when it comes to psychology, the way we think about this, it matters. Yeah, most people start trading on demo. I'm not a big fan of demo, honestly. Okay, demo is good if you're trying to get a feel for the strategy. You want to know, where do I buy, where do I sell, execute buy, click sell, click buy, click sell, click buy. It's pretty good if you're trying to practice that. But now, in order to practice, what can I call it? Emotional intelligence when trading, because there's something called emotional intelligence, EQ, right? Emotional intelligence, that is learning how to manage your emotions when you're entering a trade, when you're in a trade, and when you're about to exit a trade. It's very important. That's where most traders go wrong, because everybody is focusing on strategy. Oh, the strategy. Ugh. And they get it wrong right there. I mean, strategy is important, yes, but your mindset, that is what will either make you successful or not. The way you see the market. Me personally, when I see the market, I'm always happy. Whether I take a win or I take a loss, that doesn't affect me. I'm always happy. I don't fight the market anymore. I don't have a battle with the market, because I know I'm winning no matter what. I just know I'm winning. That's my mindset. I'm always winning, even though I take for example, I took a loss here on Friday, but I know I'm winning still. I'm still winning because I'm not concerned about winning each and every trade in the market. I'm concerned about winning a series of trades. You know, I might lose a trade, lose another trade, but in the end, you find that my wins, when I total up all the money I've made from my wins and all the tiny losses along the way, I've made a lot of money. That's what I meant. So being concerned about each and every trade is not the way to go. First, start from there. Just don't be concerned about winning each and every trade. Don't do that. Okay? Just make sure you concentrate on the big picture. Zoom out. Okay? Zoom out of your charts like this, and focus on the big picture. Focus on the big picture. Don't just focus on one trade. Zoom out of your charts and focus on the big picture. See how many trades have gone my way. How many trades have I made money from? Like, you made monster cash right here. You made monster cash right there. You made monster cash right here. You made some money right here. Had a little loss right here. Oh, it's like a break even or whatever. Then you took a loss right there. So you don't really pay attention to, like, oh, I took a loss here, I took a win here. Look at the big picture of things. Okay? That's DJ, for example. So you only learn emotional intelligence when you're trading from a live account. A demo account, I do not care how good you become at trading demo. The moment you start trading with real money, you will not trade the same way you traded your demo, because now money is involved and you have not trained yourself how to emotionally manage your money. How do I emotionally manage my money? Is that I always trade a certain percentage of my money. I don't trade my whole amount. That's bonkers. I trade, let me give you a trading plan. Trade between 2 to 3% of your account on each trade. In that way, even if the trade does not work out your way, if you take a loss, you might lose maybe that's 2 to 3%. And if you are managing your trade aggressively, you might even lose less than 1% of your account if you manage your trade properly. So trading that little money, of that little percentage, of 2 to 3%, it can yield greater profits of probably 10, 15% or even more, depending on how aggressive you are when trading. Like, if I, for example, traded, let me use this example right here. If I traded this particular trade right here, just trading 2% of my account, I could have easily made, right here, I could have easily made over 50% of my account just on this trade alone. In 2 days right here, I could have probably made over 50% or more of my account from just trading 2 to 3%. Why? Because when you get comfortable with trading, you start doing this thing called leveraging, opening multiple positions. So imagine right here, imagine if I put, let me get this tool, okay? Imagine if I opened right here, 2% of my account. I trailed my stop when this opportunity came. I trade another 2% of my account right there, open another 2%, and then right here again, open another 2%, and then again as it moved somewhere here, I open, right there, open another 2%, and then right there, open another 2%. 1, 2, 3, 4, 5. I've got 5 trades running, and each one's at 2%, 2%, and I'm trailing my stops as this thing is moving. And remember that in Forex, that this here would be my risk on this trade, okay? This here would be my risk on the second trade, okay? This here would be my risk again on the third trade. Notice that the lesser the risk, the more money you make, because your positions become larger, okay? I like trades like this with less risk. These big trades here, your lot size becomes smaller because you have to account for the risk in pips, okay? So less risk in pips like this equals larger lots, means you make more money, okay? So yeah, your returns on trading, just a tiny percent of your account, pretty good, really good. You can make a comfortable living of trading a manageable lot size. This is how I trade my main account. I do not go crazy on my main account. Going crazy comes later. When you master the simple basics of trading this way, the simple basics, it becomes very simple to you, such that it's like riding a bicycle. You start off learning how to ride a bicycle in a simple manner, very simple, very easy, and then when you have mastered it, you start doing all kinds of crazy stunts on the bike, right? Because now you have mastered it. You start doing some crazy things, turning $500 up to like $50,000 in just one trade, because now you have mastered the basics. So I'm trying to get you guys in my masterclass to really get a hold of the basics and let this trading thing become a part of you. Like, it's simple. It should be really simple. You know, such that even on your own, you'll be able to just like, oh, okay, fine. I know what I'm going to do. I'm going to turn this $200 to $2,000 just quickly. You know, like, okay, fine. If this trade goes my way, and I'm leveraging this thing, I'm just going to leverage this bad boy. I'm going to put all $200 in, and I'm just going to leverage it. If I blow, I blow. It doesn't matter. I'll put out the 200 if it doesn't work out. You know, so you just leverage that thing and you turn it up and see how far it will go. But to get to that stage, you need to know the simple. So I'm trying to keep this as simple as possible and get each one of you to understand the simple way of trading. And then later on, your intuition, you just understand like, okay, wait, I can do more with this. Okay, I just want you guys to master the simple things first. And then you'll be able to do the rest on your own. Even you'll be able to just kill the markets completely by yourself without even asking like, hey, what about this one? What about this? What about that? Nah, you'll be able to see these things on your own, right? And another thing that's very important when it comes to your trading mindset is sticking to your rules. Do not force a trade. If the trade does not conform to your rules, do not force it. Do not be desperate to take a trade. If for example you're starting to see hidden divergence for a bullish trade, and at the same time you're seeing a bearish trade, don't trade it. Wait for the next one. Don't be desperate, you know. Don't be desperate. The market will give you more money. For example, here, let me do this. Let me show you something. The reason I trade 5 pairs is because of this. Off 5 pairs in a week, you know that on average you are going to have plenty of opportunities. If GJ doesn't give me opportunities to trade, I know that maybe where are my pairs? I know that probably GBP/USD might give me something, you know. Why is my net so slow? Wow. Okay, I know that GBP/USD might give me something. Okay, so as you see, GBP/USD also gave opportunities, you know, like there are always opportunities. When I scan my pairs, I know that I'll have opportunities. Then this is GJ, this is GU actually, then there's EU over here, no, EJ, right there, opportunities on EJ as well, right there, past opportunities which I took, past opportunities which I took, past opportunities which I took, past opportunities which I took. Now I mark my trades like this. The orange part stands for where my stop losses. The red stands for the last stop loss that got hit when trailing. That's where my trade took me out. Okay, so right here I entered right there. My stop loss was here. My stop loss moved to there. 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 I was leveraging that time because I do leverage sometimes, but I will not leverage with you guys for now. I want you guys to first master how to execute the trade and trail your stops. Leveraging to come naturally to you after you understand how you trail your stops. You just see that, oh, I can just leverage and add more trades here. So you'll be able to do that yourself. I'm just going to show you how to trade the basic way. So I've trailed my stop there, trailed my stop there, trailed, and then the market took me out there on that red part with my trading stops. On this particular trade, my stop loss was right there, and then it moved to here, and then market took me out over here. Then I entered over here another trade, market took me out on the trading stop over here. I entered right here, market took me out right there. You know, that was a straight loss, but then I entered again straight away right here, and market went that direction, and I trailed, and market took me out here. I entered on this day over here, my stop loss was there, market took me out over there. This was Friday. I had a loss on this one Friday. I took a sell right here. Let me show you. I took a sell. This is EJ as well. I took a sell on EJ on this particular candle because it lined up here with my CCI. As you can see, it lined up with the first bar of my CCI. I took it right there, and then the second bar changed color and was lower than this one, so I trailed my stop to right there. So as you see, my risk on this trade became, look how tiny this thing was. See how tiny this thing was? That's how my risk became. So the market unfortunately turned against me and went that way. I took a loss here, but it's a very tiny loss. It's very negligible because I am managing my trades. That's how I keep my money. I take trades and losses. I take losses in trades too, but I manage my losses. I manage my trades. I usually like to lose less than I risk, so I keep more of my money. Okay. So that's how that played out. Um, so oh my god, I still have a flu. I've been sick this past few days. Imagine I've been sick but still running the old group. I was running that group so much, multitasking, that at some point it was even affecting my actual trades. I would enter trades late because I was helping a lot of people and I couldn't manage the number. The number was really, really huge for me and I just couldn't do it. Now, okay, another thing I want you to understand is that but basically we've covered everything in just this short video right here. The rest, I believe I'll try and make a PDF that I'll list maybe some things I've forgotten to mention in this video. I'll list them in a PDF and I'll post it in the channel. You have access to it in the channel, but other than that, I think this is it. That's it. So we'll see how this coming week's going to fare. I know we're going to have a very good week. We always have good weeks. We always make money every week. So I know that it's going to pan out. We're going to have a very good week. We're going to make some profit. How do I know? Because I'm PSG, baby. I'm PSG. And the market is Fulham. I always know. In the end, I'm going to come out on top no matter what. No matter what. Now, for my brothers that are in the US, I mean, I understand time difference and you're unable to take trades that probably have execution times during London session. But I have made this masterclass in such a way that it's really simple. I can trade lower time frames, the 30 minutes and 15 minutes, even 5 minutes if I want to, but I prefer trading the 30 minutes to an hour. But to make this masterclass very, very simple, I told us, let's just focus on 1 hour, only 1 hour. Why? Because we come from different walks of life and some people are working. You cannot spend the whole day on the charts, staring at the charts if you're working. But trading at the 1 hour time frame, you're able to just probably just grab your phone, pull up TradingView quickly on your phone every hour and just look and see, okay, scan through the 5 pairs every hour. GJ, is there anything? Oh, nothing. EJ, is there anything? Oh, but you're an EJ. CJ, is there anything? Oh, AJ, what about AJ? Is there anything? You know, quickly scan through the pairs every hour looking for opportunities. So I feel like if you're trading the 1 hour, you actually get to have a life. You get to do things in your life without spending so much time on the charts like a zombie, you know. So that's why I recommend and I feel like we should all trade the 1 hour to start with, so that you get so that you all get a feel of things, you understand how things are and become comfortable with the chart. After that, my brothers, you are free to trade whatever time frame you want. But I just want you guys to first master this 1 hour chart. Just understand how the trading flows. After that, you're free to you can even scalp the 1 minute if you want. Oh, I mean, this strategy works everywhere, but for simplicity, I've picked the 1 hour chart. Okay, so that you guys, even at work, you can just pull out your phone, you know, and just look at the charts quickly. You scan through the pairs and find a pair and execute and just go about your day. It's very simple, very, very simple. And like I was saying, if you live in the US, you'll find that probably London session for you is during it's probably like your 2 a.m 3 a.m It's kind of crazy for you guys. It's probably like your 2 a.m 3 a.m, maybe some of you can 4 a.m, I think. I don't know, depending on where you stay. I don't know what your time difference is, but if you can, you know, and you should wake up, if you can, try and wake up early enough and just check your clock every hour for opportunities. I mean, if you want to make money, you can't be lazy. Let's not use the word lazy. You've got to try and make time for the money. You get what I'm trying to tell you? Like, if your money is going to come if a bulk of your money is going to come at 3 a.m, why not wake up and see if you can find an opportunity to just grab a piece of that pie and take your money, you know? Like, if let's say you're trading an account of like maybe whatever money you have. I don't want to start talking about account sizes because we all come from different walks of life. The way I see money may not be the way you see money, and the way you see money may not be the way I see money, and we have access to different. Let's not talk about money. Let's just talk about profit, okay? No matter your account sizes, okay? Just know that if you want to make money and you want to make forex trading your full-time career, you need to make time for it. That's what I'm saying. Try and make time to take a piece of that pie out of the market. You will not be able to get each and every trade in the market, but the trades that do come your way, try and make yourself available to just snag that money. Okay? Yeah. And I hope that's it. I hope I've not forgotten anything. If I have, I'll probably write it down in the PDF. I'm making another PDF for you guys. I'll post it in the group shortly after uploading this video. Okay? See you guys. Win today. Win tomorrow. Win forever.